Well, hello. Welcome, Maverick traders. It's market roundup time. Joe with you here. It's December 18th. Just a boring little Wednesday with not a lot of action. That's a joke. I've got my 2 cents. We're definitely going to get into it here. I'm going to take a look at the meaningful news of the day. Let's take a look at what the markets did and see what we can play with when it comes to technical setups and trades. As always,
disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's just get straight into the market analysis, folks. And wow, there we go. That little sizable shakeup, that volatility spike that we were thinking about, and all the bears can be saying, I told you so. Well, it happened. Let's take a look at the daily news. So, sizable sell-off across all the markets and sectors. What happened? Well, lots of things. The first off was the Fed cuts rates by the expected 0.25 basis points. But, now, folks, I ran out of websites to pull butts out of, and there were a lot of different things. Anything from expected deregulation and banks moving into next year because of the Trump administration versus some of the worries moving forward with continuing rate cuts as the Fed came out pretty hawkish, saying that, look, things are kind of at that soft landing. Things are a little sticky. I'm not going to be as aggressive. Was continued cuts price in the markets. Well, that's part of it. Were we already overextended? Was that part of it? Things like we're getting into the end of the year, the Santa Claus rallies played itself out. That was part of it. The fear of missing out and the flash sale. There are so many butts out there, folks, that I couldn't take as many snapshots. They would just fill this class. So let's get into it. Dow down 2.5% over that. S&P shy of 3%. Q's 3.5%. Russell's, it was a huge sell-off. I think it's one of the biggest I've seen. Gold down. Oil was, I saw oil at a flat pretty much at 70 a barrel, and I saw it slide a little lower down about 0.5%. So let's just get straight to it. Advanced decline line, 88% declining, 9% advancing. This was across everything. You can already see the heat map. We'll get there in a second. But below the 50-day moving average, 73% below, 27 above. Some of the other things that I was bouncing around with, folks, is we were already consolidating. These markets were already seeing profit taking in some of these high flyers. It just happened to be what I refer to as a perfect storm. We just need some sort of a small catalyst. So let's just, well, not a small catalyst, but a catalyst enough I like to refer to it as get the frogs to jump. We are still, with this candle today in the SP, and I've got a slide coming up, I still believe we're comfortably, 23% for the year, including today. So, yeah, there's a lot of profit to be taken. Will this continue? I'm not sure. We'll take a look at it. But just keep that in mind, because I really don't like to react to things like this or make trades based on it. Absolutely, we have to manage our portfolios. I imagine you guys are either at max gain or max loss, depending on your direction. Well, let's get over to the Qs. I guess what I'm trying to say here, folks, is really nothing you can do to or for a day like today, but just kind of, interesting. Same idea. I mean, look at this. Big move to the upside here. Let me get my pen out again. It's the Qs, the outperformer. Interesting enough, look where today's sell-off stopped. Weird, right? It doesn't mean we're not going to fall apart tomorrow or the next day, or maybe we consolidate. I'll get there in a minute, meaning you guys shouldn't be pushing any buttons. But overall, it's just a pullback, a very scary, aggressive one. I don't even know what the Qs are up for the year, but knowing that the S&P is 20% already, still up even after today's correction, it's not the end of the world. What it is, I believe, is just sentiment reaction, and it was across everything. Healthcare guys did pretty good, but any sort of fear or worry or people that wanted to take money out or indications of a slowdown, or anybody that had priced in continuation of an easing Fed, all those things hit at once. And sorry, folks, if I'm not touching on another event that you might know that I don't, but it was that perfect storm. So I do not have any trades for you, but I do have some fun things to look at. That is panic. A wonderful capitulation. This is a VIX that you want to see whenever you're kind of worried about things being too extended, or I want to wait for my my opening. This is the first part about it. This is the big sneeze. Any sort of sentiment expectation, and I'm going to say that whether it was political, whether it was economical, whether it was fear, whether it was greed or fear of missing out, all of that is getting flushed out. And what's neat about this is it can reset. So once it starts to reset, then we can say who survived, who's doing pretty good, where are things going now, because that last ditch euphoric effort is kind of working its way out. Now, let me go back, because I know my bears are super excited, but I want to make sure you guys understand going forward, this isn't the end of the world and by any means whatsoever. This is a weekly chart on the Qs. This is 2024. We are going to, I don't know, maybe we can, if we do we'd have to sell off 2 or 3 more days in a row like this. We are already going to set records on one of the strongest years. We blew one out last year. Let me get to the SPY chart, because that's the one I want you to show you. This is the Qs. Let's get to the SPY. A very ominous looking candle here today, right? It's down, but look at this in context of its support level. This is a weekly chart. I mean, look at the slope of this 20. Look at the slope of this thing. This is 2024. We just come off of a 20-something% year. So, yes, it's aggressive. It's scary. It's the end of the world. Everything's going to change. The answer is it's not. When they happen, they just happen super euphorically and super reactionary. That's what sentiment does. And you've heard me tout about this for years, folks. Whenever you see sentiment change, it's aggressive, it's fast, and it's obvious. And this was that day. So what am I left with? One of the funnest things ever. Okay, so I've got my weekly outlook. If I was to chart this blindly, below the 20, below the 50 in a day, but the slopes are still bullish. I guess there's an argument that 20 might have flattened itself out. So I've just got one candle to make a whole judgment call on this whole chart. You can't. But I can continue the trend it as a support level. Yes, sure. I mean, I don't know. I don't know what's going to happen, right? But I'm charting it as I see it. I cannot make decisions today. I will not make decisions today. You just have to sit through it. +1. Yeah, I went from a +3 down to a +1 because that's where I'm at. It's at a support level. It's below the moving averages, so I didn't give it a +2, but I gave it a +1. Oh, that's one day. We'll see what happens tomorrow. So not a lot I can do. Let's just break this down for what it is. One of the largest moves we've seen in a long time. I think it's percentage-wise. I didn't get all the facts yet, folks, but it'll play itself out. It's huge. It's a big one. It is a perfect storm scenario. We have a transition when it comes to policies, when it comes to rates, when it comes to politics, about to change hands. We're already seeing things like that. We've already got speculative trading. We've got S&P to NASDAQ that just went higher and higher and higher. We have things that are well overextended. We've got possibilities of deregulation when it comes to some of the banks are giving loans, but we do have a spending economy. We are still strong. We are still in that soft landing scenario. We're employed and we're spending money, and inflation is sticking around. So you've got a hawkish Fed that is trying to keep us balanced. We've got a market that might have priced in a bunch of rate cuts, up to 2 rate cuts in 2025. Yeah, I mean, it's too early to make that, but showing that there's going to be less. And if it's already priced in, you're going to get these reactions. That's the perfect storm. What's right, what's wrong, what's real, what's not. Everybody's worries all came in one beautiful, perfect today. And that's what we're seeing. So PCE numbers are out tomorrow, which is a big part of what Powell was talking about when he had his address. I don't think anybody's going to care because we're just trying to work through what happened today. It looks like a panic. It's not. But I've seen this reaction before. So what do? Allow things to stabilize before looking for new opportunities. The best thing that we could have done probably was just to sit back and maybe go on vacation. And then let the holidays go by and then come back to this a little bit later. Let's sit through this. Let's look at it. I didn't show you trades because I don't want you trading. I'm not trading. Let's see what stabilizes. Let's see how these pan out. This could be just one big massive flush out and then we go back up and close on highs for the end of the year. Or it could be the beginning of something a little bit more aggressive in correction. Trust in the fact that we're already up a super, super, super high amount percentage-wise. The economy is super strong, and it always has been. I'm just seeing conflict of interests on three or four different areas, right? Political, financial, and sentimental, right? I believe in this, I don't believe in that. Sentiment. They all come together at once. this is what happens. All right, so I've got MU and Lennar. Both of them are out. I don't think they had a chance. MU missed. They're down 13%. Lennar said they saw a little bit of struggles because of the higher interest rates, and they're down about 9. That could change. That's what I've got. So sit back, enjoy the fun. It's fireworks. But just trust in the fact that if you're positioned sized correctly, you'll be completely fine. But don't try to outsmart this. Let it play itself out. And then hopefully this goes into the holidays and we can just enjoy it. All right, folks, we'll definitely be talking to you in the next couple of days. And so we'll just update you as we see it. Thanks for joining me. It's a fun day. Talk to you next time. Bye, everybody.